is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 11th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let your fingers do the walking. All you have to do is send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 151 points. 26,007 is the print. S&P is up 0.5%. That's 13 points. Trading out at 28.90. NASDAQ 100.7%. That's 53 points to the upside. Russell's up 4. Semis are off nearly 1% or 12 points. That's trading out at 1363. Trendies are flat. They're up 5 points. New York Stock Exchange, we'll check in on that. It's up 0.25%. Gold is flat, up 70 cents. Silver is down 3 pennies. Light sweet crude up nearly $2. Trade out at 69.42. Leading the charge, the upside dollar-wise, it's Amazon up $29. Google is up 9. Casey General Stores up about 9. United Rentals up 8 and change. To the downside, Tesla up nearly $11 or 3%. 274.87 is what she's printing. Intricon Corp down 13% or 960. Broadcom off 7. Liminaria, something like that. LMNR's ticker symbol off 18%. That's 6 buckaroonies to the downside. So where do you want to start? Let's start by taking a look at what's going on inside the S&P 500. I tried to describe to you what's going on. Maybe I may have to wait for the break because my Ninja Trader charts crashed just before. Oh, my chart is down. Hey, we've got to make sure we get this chart posted here. That doesn't do you any good to not take a look at my charts. So let's get those up. One set of my charts crashed just before we came on the air, so that was not good. But we've got the e-signal charts and some other tools that you and I can use to identify what the markets are doing, what to pay attention to today. So let's start by taking a look at the S&P. Let's do that by looking at the equity futures contract. Always provides you and I with more information. In this case here, we're going to take a look at the ES Mini. What's the level that you're going to be watching today? And that level is going to be 28.89. Right now you're trading at 28.90. So we're really right on that precipice. What is 28.89? That is the bottom of a bullish structured daily TAS market profile. Price had closed below that level on the trading session of September the 6th. Yesterday was a test and rejection of that level. Now we say bullish structure because the center of that box was closer to the bottom than to the top. That says 28.89 should have been good support. Once good support fails, old support becomes new resistance. That's what we saw take place yesterday. So if you were to see the ES Mini close below 28.89, then at least you know the line of demarcation. And this would then also say that sellers are still the ones that are in control of the game. If price closes above 28.89, and specifically if it really close above 28.96, but it only needs 28.89. 28.96, by the way, is the center of that box. Then it tells you that the bulls are back in town. That's right, the bulls are back in town. Now, that's what this chart here shows. But you and I, we've got more And by saying we've got more, we can go take a look at the market breadth of the S&P 500, the actual cash indice out here. What we're taking a look at is the green line and the red line. We can see that while I was away on vacation, we had a little kiss and tell. That was on September the 7th. And that was when we had, so what we're looking at here, the red line represents percentage-wise, the number of stocks that are trading below the bottom of their box. We just looked at the ES Mini price was trading in essence at or below the bottom of its box out there. Below the bottom tells us that support has failed, so therefore it is presumed that sellers are the ones that are in control. Sellers, bears, we just use that terminology from a directional standpoint. Likewise, the counter to that is the green line. And the green line here tells you how many issues are trading above the top of the box. As we speak right now, we have 193. That would be bullish, by the way, or buyers would be in control. 193 above the top, only 113 below. So you never really had a bearish crossover, just a little kiss and tell. So market breadth for the S&P 500 is very bullish out there. I'd say very bullish because it's almost 2 to 1. It's not exactly 2 to 1, but 193 versus 113. If we want to take a look at how many issues are trading inside the box, we could put a blue line on the chart out there. But those that are trading inside the box, for the most part, we're going to call them consolidated. You could lean those in a trending market up towards the bulls or the bears, but right now we'll just take a look at the breakout and the breakdown stocks. Right now it is Advantage, the S&P 500. What else do you want to take a look at when it comes to the end of the day? Well, I would say the next piece of evidence that you're looking for in order to rule on what the bulls and bears are communicating to you today is going to be that spot volatility index. Right now, it's trading out at 1356. The number that is the bottom panel of the screen that you're focused on and paying attention to. What you are looking for is whether or not price closes above or below the 50-day exponential moving average. 1328 is it. So what we have here is a bit of divergences going on. Here's how I would take it. Here's how I would trade it, so to speak. If you see the ES Mini close below 28.89 when the contract closes this afternoon, and the spot volatility index is above the 50-day, again, that's 1328 out there, it is still telling us that sellers are the ones that are trying to exert their influence. What we also know is that market breadth has said not so fast out there. So look, if you're bearish, don't get overly bearish out there because you haven't seen a real turn. And likewise, if you see prices close inside the box on a daily, maybe the spot VIX is still above the 50. It's a 50-50 chance. It's not really 50-50 chance. I just went with the 50 line out there. But it's kind of risky to be short at that stage. I understand it. Just saying, it is a risk. If we take a look at the New York Stock Exchange Advanced Decline Oscillator, well below the zero line, that is panel number 2. Its reading right now is about 61 and change, minus 61, I should say. But what we can see is that little white dashed line happens to be a level where we have seen other bottoms inside of the S&P 500. So as we go into this break, the first break out there, we'll see if anybody sent in some emails. The S&P 500, right now, we've got to call it a toss-up. But you'd say, as we speak at 114, more bullish than bearish. Slightly different story with the NDX 100. We'll talk about that when we come back from this break. Steve Rhodes with TFNN. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So a couple questions that have come in, one by Kevin about the GDX, one by Mr. Z in the Tiger's Den, wanting to take a look at the ES Mini, which is what we did during that first segment out there. But his question, in essence, is what evidence do we have that, and so I'll just summarize this, what evidence do we have that the bounce that we've seen since last week on Friday, I believe it is, or Thursday, the 7th, whichever day that was Friday, is nothing more than just a bounce. You know, the answer there is that I would say is you need to watch the close today. If the ES Mini closes below the bottom of its market profile, 28.89, that would then suggest that old support has become resistance, and I can see where that would see, and especially if the spot volatility index is above the 50-day exponential moving average, you'd have those two components to suggest that it was just nothing more than a bounce. The problem is that this was nothing. The other side of that is the fact that the fact, Jack, let's keep to the facts, is this, and that was the market breadth that we looked at. Because inside the S&P 500, good Lord, why did that happen? The S&P 500 market breadth never changed to bearish. So I can't say that, the trend, in essence, with regard to market breadth on a daily basis for the S&P 500 never turned bearish out here. So to suggest that it's a bounce, that was just it was a retracement with regard to market breadth as that got down, in essence, to even Steven on September the 7th as price pushed lower. So we'd have to say at this stage here, market breadth rules out here. And so I think the language used is kind of is assuming, and I will not make that assumption, that it was a top, yeah, short-term top, but all we saw was just a normal retracement when I take a look at the market breadth of the S&P 500. Now, we're going to use that as the entree into the NDX 100, because here we just have diverging information in the markets out there, and at times you don't have synergy. When you don't have synergy, it makes it hard. If we take a look at the NQ, or the NASDAQ 100, we can see we did have a bearish crossover. That bearish crossover, by the way, took place on September the 5th. When I say bearish crossover, more issues trading below the bottom of the box than above the top. As we speak right now, it's 28 above the top, 38 below the bottom. Market breadth here is El Stinko. Yeah, it is in the hands of the bears out there. But the question is, then, did the NQ bottom on September 7th? You see, if you ask, to me, it's always about the questions that we ask, both you and I. And I think that that is right now the more important question for you and I to investigate. So let's go investigate it. Let's go do that. Let's go right to it. I have to change my panels out here. That was a strategic pause. We're going to take a look at the 5-hour energy drink chart brought to us by Saratoga Bob, who used to be in the Tiger's Den all the time out there. And if we take a look at that, he's the one that turned Mr. Z, myself, and anybody else onto that 5-hour chart. And that's what we have up on our screen out here. Why it works, I don't know. I just know that it does. We can take a look at the last top that was formed inside of the NQ, and you'll see that it has one of Stevie's Rhodes Momentum Indicator tops out here. That took place at the trading session at 1700 hours, and it did it on August the 30th, I believe was the day. My system is beeping at me, and it's kind of acting slow here. Why, I don't know. Come on, there you go. August the 30th. Now, if you take a look at what took place here, Mr. Z, as the NQ was pushing lower on that 5-hour chart on September 7th, 2 o'clock in the afternoon, okay, that's the time frame out here. I know you were asking about the ES Mini. I'm saying what's more important is the 5-hour chart for the NQ. It had that Rhodes Momentum Indicator bottom signal, and it was confirmed right at 2 p.m. What took place yesterday, and while I was traveling, I had subscribers, those that wanted to go short the S&P 500 because of seventh wave moves and other things like that out there, and what we saw going on inside the New York Stock Exchange. But then yesterday morning, when we saw that we had a Rhodes Momentum Indicator bottom signal on the 5-hour chart, and I was also traveling, I said, hey, if you're short, now's the time to close out that short position, especially if we see the NQ close above the top of its 5-hour profile. That exact number, by the way, was 74.7925. And I said, do that if you see it close above that at the 9 o'clock candle session close. You know where it closed at 9 o'clock? 74.79. 0.25, one tick in essence, but really below. So it never closed above it. And then we didn't see it close above it all day yesterday. What took place? Price came down and tested the bottom of that profile. That profile on a 5-hour basis, you're looking at it, lower right-hand panel, bullish in structure. Bullish in structure. So support held, 74.22 out there. As we speak right now, this candle session doesn't close for another 36 minutes. So, Mr. Z, I won't have that answer for you. But what I can say, just like I did yesterday, if we see at 2 p.m., this instead of 9, at 2 p.m., if in fact the NQ closes above 74.7925, you now have a confirmed bottoming signal in the NQ. Now that could turn into maybe either a bottom or a counter trend rally. Right now you have to go with the counter trend rally because of the market breadth or lack of market breadth inside the index window. Look, you don't have to do anything. I'm just kind of walking through what I see out there and then just simply sharing that with everybody here. And what I would suspect, what I would anticipate is the NQ would at least bounce into the 75 50 type area, 75, 45, somewhere right around there, where it might find its next resistance line. The reason I say might is the following. I'm going to put the 5-hour chart up on your screen out here as I'm trying to drag it over there, just hoping that it will work with me. Come on. We're on live internet TV and radio work. These folks want to see this. It used to flow so much nicer. I don't know what's going on. Here, we have this chart. Everybody pay attention to this chart. And everybody pay attention to those black arrows on the bottom of the screen. You see each of those arrows? Those are the same Rhodes Momentum Indicator bottom that formed. And therefore, if at 2 o'clock you see it close above 74, what was it, 74.7925 out there, you'll have a confirming bottom, just like you did at each of those other black arrows. So you tell me, it's not a guarantee in life, but do you want to go against that pattern that had called those prior bottoms? Maybe you do, maybe you don't. So watch at 2 o'clock. We go off the air at about 2 or 3 minutes too, so I won't be able to give you those that number, but you know what to look for. You can find out what the NQ is trading for. You just download the CNBC app. It's free. You'll have it on your phone, your iPhone, your Android device, whatever you do, and you'll be able to exactly see where those futures contracts are trading out. So the NQ is the one that is given it. The ES Mini did not generate this pattern, at least not on this time frame out here. But the 5-hour time frame has been really good with regard to the Rhodes Momentum Indicator signals. Since in all of 2018, it's been doing that, this pattern forming this pattern for the last 130 years. That's what is the pattern that is present before the beginning of every bear market in the Dow. Pretty cool, huh? I think it's pretty cool. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by thinkorswim. For more information, just click the thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So just to summarize now, because there's really two things that you and I have ripped apart. The ES Mini and the NQ out there. And so in essence, the key levels to be watching at today's close, We know it's 28.89 in the ES Mini, bottom of the box. Inside the NQ, it's also the bottom of its box, which has been tested. That's at 75.2450. If price were to close above that, in other words, get back inside the box, opens up a run to 76.28, 76.97. If price closes below that, then old support has become new resistance, just like in the ES Mini. Then that message is telling you just that. It is telling you that, look, sellers are really trying to exert their force here. There's been no real confirmed bullish move out there. The difference is between those two and the Dow is that the Dow is the one that is really perked up. Earlier this morning, before I left to go to a dental appointment, nothing like going on vacation, in essence, and coming back day one and having to be sitting at the dentist, but so be it. And I love my dentist. In any event, out here, earlier this morning, looked like the Dow equity futures contract was ready to give up the ghost. I say that because price was trading inside of its box. The top of the box, which is 25,896, panel number 3 out there, you can see that has acted as huge support out here. And that includes today, too, because really, at the end of the day, it's all about the body of the candle, not the extreme emotions, which are the upper and lower shadows out here. So if the Dow closes above 25,896, it's just not ready to give up that ghost. If anything, it is telling you just how important that level is when it comes to being a level of support. Inside the Russell 2000, number you're paying attention to is 1722.28. Now, why is that important when it comes to the Dow? Why? Why is that so important? Well, it's important because we have to go take a look at and see how the Dow is performing when it comes to the major currencies out here. And here is our chart. Here is our monthly time frame chart for the Dow. The left-hand side is U.S. dollars. And you can see Steve has as well. I have marked consolidations for each of the major currencies, the euro, the yen, and the pound out here. And we can see that inside the Dow, U.S. dollars hasn't broken through its highs, its January highs out there. So still kind of suspect, but it's getting its sea legs out here. And I do mean sea legs. Like we may see the highs get taken out. 26, 616, 71 in the cash indice. I'm going to tell you or share with you my belief, and it's well-founded belief. If we see a close above that at any point in time, the Dow will be taking off topside like you haven't seen before. You know how everybody is thinking that what the Dow or what the markets are doing is they're making a top? You got Ray Dalio out there pushing some stuff. You got a lot of people out there. Well, I will take the exact opposite side of that stuff that they're pushing. That instead of the markets actually finding a top, that the signal that I saw in July is in essence that the Dow has just formed a new major, spelled with capital letters, M-A-J-O-R, major bottom. If we take a look at the Dow, and why is the Dow getting its sea legs in dollars? Because in dollars, those traders are seeing that the Dow continues to break out to new all-time highs inside of euros. On their traders' desk, they are not, I repeat, they are not sellers. All of those folks that trade in euros, and there's a lot of them, are seeing the Dow break out. They're saying, I'm going to go ahead and put my money in the momentum stocks out here, and they're putting them in the Dow. In the case of the yen, it too is very close to getting back to a brand new all-time high. It's really just sitting at there right now. That's panel number 3. So traders in Japan, they're liking this party. And if you take a look at traders in pound sterling, they too are liking this party. This party will not end until the Dow makes highs in all these currencies at the same time. That's not likely to happen anytime soon. That doesn't mean we don't get corrections. But what the Dow is doing is it has attained a new, huge, gargantuan, very important level out there. I know you say, what do you mean, Steve Areno? I hear somebody saying that. I know that there's doubters out there. I can feel it. I don't like to feel it, but I can feel it. I can feel it in the air. I just got to look, where did I put that file out here? Where did I put that file? here's what and I tried to open up something, but I can't. Let me show you this. Let me share this with you. For those that want to understand what Steve was really trying to say. You know what? Yeah, let's do that. Then I'll go back to Kevin's question. I got 3 minutes here. Let's see if I can do this in 3 minutes out here. Yeah, I'm just going to show you a newsletter chart because I can't get my system to open up here. But if you take a look at this chart here on the screen, muy importante. What is this? This happens to be a quarterly chart. Yeah, this is a quarterly chart that takes us back into the 1926 timeframe, 27 timeframe for the Dow. What I want you to pay attention, by the way, this is set at a logarithmic scale out here. What I want you to do is I want to take a look at that blue diagonal line that starts from the high in 1929 on a logarithmic scale, moves into the highs in, where is this, 1965? Yeah, 1966 out here. And, you know, they're talking in 1987. Here's what I want you to picture. In 1987, the crash of 1987, for those of you that remember that, some of you were invested in the stock market. Scary day. You thought it was the beginning of the end, or many people did. Scared the, you know, what out of me and everybody else. I remember where I was specifically that day. In any event, here's what I want you to know. That all price was doing, when price breaks out above a level of resistance, that's what this trend line is, this blue diagonal line out here. That's what this trend line is. You like to see price come back and test support. In 1987, the so-called crash of 87, well, so-called it was, all it did was come back and test support. And that was the bottom. That was a major bottom. You know how we talk about how price has moved so high, in essence, since the 2009 lows? And remember, just weeks ago, people were talking about how, you know, it's the longest bull market and so forth. And you know how I was calling bull on that? Or you don't know, how are they deciding their starting point and ending point and all that stuff out there? Realize that from the lows here in 1974 to the high in 1987, before that crash, there was a 379% move. And all that took place was we saw the crash come back and test support and took off after that. You know, we're about a 311% move from about where we're at right now in the Dow to the lows of 2009. You see this other blue diagonal line up here on the right-hand side? That's the exact same line, just taken to the new, in essence, pricing area that the Dow is in. That's just looking, that's the exact same diagonal line from the 2000 high to the 2007 high. A new phase in price has begun. And guess what? It was confirmed again in July. A major bottom has been put in on the Dow. That major bottom will be confirmed when price takes out the January highs. It really is that simple. Most of us haven't traded markets like these, and they're going to be difficult to trade. But a new phase of price has begun for the big guy. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go take a look at Kevin S.'s question. He says, hey, Steve-O, hey, Kevin-O, using the volume model, do you agree that the GDX is now testing the March of 2016 bar, weekly, monthly testing? So let's go over to the monthly. Let's go over to the monthly file, and I see February. So let me finish the question. Also on a weekly basis. The volume is incredibly light compared to what it's testing. A great time to start a position for this reason. So when we take a look at bars, when we take a look at volume testing here, Kevin, what we're looking at is a swing point. So if we take a look at swing points on a monthly basis out here, the swing point I would be looking at is January 1st, 2016. That is the low that's out there. The low is 1240 and the high is 1501. So we're not testing that bar just yet. Is it testing? Is it moving into kind of a sign of strength from February of 2016 that had 1.9 million shares? Yeah, you came down last month with 1.1 million shares, so nearly half. But you haven't actually tested the swing point, at least the top of it. When we take a look at the monthly chart. What we do have out here on a monthly basis is we do have a break of a consolidation, Kevin. And that's a consolidation between January of 2017, and that consolidation was broken last month, the month of August. And so when you break a consolidation, you have what's the equivalent of a measured move. The measured move takes you down equal to or greater than that consolidation level. Happens to be the bottom of the box around 1610. The bottom of the box is 1628. Look, I'm in the position, both in the newsletter personally and what I can say or what I can share with you is that we got stopped out on GDX by the exact tick today. Two other positions are open at the moment, but I can't feel good about it, and therefore I can't feel good about saying that you should go ahead and take a long position based upon this lack of testing right now that I see on the monthly time frame. You said on the weekly time frame, if I go to the weekly time frame out here, the swing point would be January 18, 2016. See, we're below the swing point out here, Kevin, from December 19, 2016. And the next swing point is that little hammer candle back on the trading week of January 18th as well. The top of that is 1324 out here. So I can't feel good on a weekly basis. The only reason why I'm long the other two positions out here is because of the directional correlation that does exist between gold and the miners themselves. And gold, we took a look at the NQ 5-hour chart and its RMI tops and bottoms out there, specifically the bottom. We take a look at Goldilocks. We have the same pattern that's in play right now. So it would to answer your question, if you were to take along, it would be because of this pattern, not because of the volume test or lack of tests that I'm seeing inside of the GDX. Pulling back in light volume, sure, but it hasn't really tested the swing points that would be critical to making that decision. But with regard to gold priced in dollars, you've got a bottoming signal out there. That then says what we should do is always take a look at gold price in those other currencies. In order for gold to move, it's got to be moving in all major currencies. And we take a look at gold has done today. Here you can see on the far right-hand panel of the chart, Kevin, you had gold in pound sterling testing a hammer candle, a previous low out here. And since then, we've seen gold move up. That is a buy signal. There's a valid test. A test of a hammer candle at 919 in pound sterling out here. So that is held. Gold in yen is looking good. I mean, it is certainly well off of its lows out there, moving higher today. Gold in euros has basically been sideways, hasn't broken through a key level support. That hammer candle 1027.40. And in the case of gold in dollars, it was just simply testing, you tell me, the prior swing point from September the 4th out there. So those are the rejections that you have, Kevin, more so than the volume metrics that we took a look at the GDX. For these reasons, I can say, yes, you can go ahead and fire away. Caveat emptor, what we have that's going against us is that longer-term break of the consolidation pattern. So just walk gingerly, don't back up the truck, so to speak out there. So I hope that that helps you out, at least with regard to what these eyes are seeing. No other questions inside of so the phone lines are open, the email lines are open, the lines in the den are open. Anybody got a question out there? If you do, go ahead and post it. If not, I'll just find something to take a look at. Excuse me while I take a breath of air and a little sip of an adult beverage, H2O. Yeah. All right, so what do we want to look at next out here? What do we want to look at next? We want to look at what do we want to look at? Thanks, Maria. Good to be back. What do we want to look at out here? You know, what can I provide you that has the most amount of information out here? I'm going to go back. I'm going to go back to this. Well, here, I know we do. Let's just kind of keep with the theme of the flow, the global flow of capital. And the global flow of capital, because I just can't understate how important this is. And if we take a look at the importance I'm referring to, here you've got a 6-panel chart. I'm going to trade the, I'll get rid of the turkey one on the very bottom right, by the way. But here you're looking at the Dow, upper left-hand corner. You're looking at the United Kingdom next to it, that's going from left to right. You're looking at Australia. Then you come down to row number 2. You've got Canada. You've got I just like saying Canada. You've got China. Then you've got India. Down lower left, you've got Germany, Japan, and then you've got Turkey. What do you want to stuff in that turkey? We'll get rid of Turkey out there, but what do you want to put there? Here's the point. If you look at this chart, these charts, these 9 charts, tell me what's breaking out. What's breaking out? Well, two things have broken out. You're exactly right. India did break out, not looking anywhere near as healthy as the Dow. Ask yourself the question, or don't ask yourself the question. Money from around the globe has to be put to work. It is always being put to work. If you were to take a look at these 9 charts out here, well, I know there's many folks out there that are bottom feeders. Let me phrase it like this. I'm going to ask you to trade momentum. And if you look at these charts, and in a multiple choice question, you had to trade momentum, which of these charts would you select? And the reason we're saying momentum is because that is our signal for where money is flowing. And the answer, obviously, is the Dow, right? And that's really important. And that's why when we see these pullbacks, okay, they're, for the most part, not forming the types of bottoms we like to see. The NQ 5-hour chart may be the gift. It may be the gift out there. Yeah, hey, I know all about the seasonal stuff Okay, but that's seasonal stuff. Should have been taking place at a top in July, which really didn't happen out there. And it doesn't end there. If you just simply take a look at what's going on from a currency standpoint and to try to figure out what's breaking out currency-wise, where is money flowing, it is clearly flowing into the U.S. dollar. Everything U.S. Yeah, Team USA. You and I are on it. Just trying to set you up for not paying so much attention to the stuff that's being put out there on the boob tube. Yeah. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Folks, so in the 2-minute run, we'll just follow up with my concrete facts out there that I think are perhaps the most important. It's called a scotoma. Do you know what a scotoma is? Scotoma is when, let's say, your lovely spouse asks you to go get the ketchup that's in the refrigerator. And you go to the refrigerator, you open it up, and he or she says, it's right there on the top shelf. You open up that refrigerator door, you look in there, you don't see it, you say it's not here. And, of course, he or she says, your partner says, it's right there. It's right in front of you, and you're looking and you're saying, I don't see it. And then, of course, they come over and they snatch the bottle from right in front of your eyes. Scotoma. It was there all the time. You didn't see it. In 1987, there was a scotoma inside the market that most traders, didn't see. Because what they saw was they saw the current day's action, or the current week's action, of the crash of 1987. What they didn't see was that what price was doing was coming down and testing that logarithmic trend line that took you all the way back to 1929. A trend line. Trend lines are important. That was the beginning of the new beginning out there, with prices moving higher. Would you have liked to have bought that 87 low? The answer is, of course you would. That's a silly question. Well, if we take a look at the Dow, you'll see the blue diagonal line out here. That's that same trend line. We saw the breakout of that. That was back in 2016, December of 2016. That broke to a new transition in prices. But we can go back to that 1987 high. And we go back, in essence, here to the highs in 1985. That is the green diagonal line. The 2018 correction, okay, it wasn't a bear market. It was a correction, came back and tested the breakout of that diagonal line that we are looking at. A scotoma. All we saw that took place in February, March, April, May, and June was a test of that trend line. Price came back to the same type of trend line that we were just looking at back in 1987 in July. It was a clear break of that. You take out the highs in 2018, and I can guarantee you one thing. Those lows that we saw in February, that was the scotoma. That was the catch-up that'll lead to higher prices for years to come. Take care, folks. Good to be here. We'll see you back tomorrow on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.